Good morning. Thanks so much for taking the time to join me today. My name is Angela Wolf, and I'm a financial literacy trainer at Access Credit Union. Access Credit Union implemented a financial literacy program in 2017 called Each One Teach One. This program was created by Van City Credit Union in 2008 and is an award-winning program that offers workshops to educate members of the community on basic financial skills. There's no selling of products or services during our presentations. We currently have 21 staff members trained to facilitate our workshops, and I'm very happy to be bringing our credit card workshop to you today. Today we will be talking about some of the advantages and disadvantages of using a credit card, best practices when using a credit card, how to figure out the real cost of using credit, and what you need to know about terms and conditions. So first of all, what is a credit card? When you use a credit card, you are borrowing money from the credit card company to pay for your purchase. Credit card companies charge interest on borrowed money if it is not paid back within a certain amount of time, but they may give you reward points or other benefits for using a credit card. Each month a bill, also known as a statement, outlines the amount of money you will need to pay back to the credit card company. We'll talk more about interest and rewards later in the presentation. How you manage your credit card is reported on your credit report. You'll notice that we talk about credit history and credit scores throughout the presentation. So if you'd like to learn more about credit history, check out our webinar on this topic, which can be found on a link from our website, accesscu.ca, or the Access YouTube channel. Let's take a look at some of the advantages and disadvantages of using credit cards. The first benefit most people think of is that credit cards are convenient. They allow you to buy items online and buy something now and then pay for it at a later date, all while keeping track of the purchases you make. Most credit cards have a zero liability policy, which means if they are lost or stolen, you won't have to repay the funds others spent on the lost or stolen card. And finally, they will also help you build your credit history, which means if you use your credit card responsibly, you may gain access to a higher credit card limit or gain access to a loan, mortgage, or other credit-related products. The disadvantages of credit cards are not inevitable. They are determined by how you use the credit card. If you are able to manage your purchases and payments, then these disadvantages will not apply to you. However, if you carry a balance, then some of the following disadvantages will apply. First, it can be difficult to budget if you aren't aware of your purchases. It is very important to watch your spending to ensure that you will be able to pay off the credit card and you don't spend more money than you have. Late payments can affect your credit rating and credit score, making your financial goals harder to reach. And also, if you don't pay in full, items will have a higher cost, which includes interest and finance charges, and certain transactions, like taking cash advances, may include additional fees. Let's take a deeper look into the cost of credit. Anytime you buy an item on credit, any interest you pay should be calculated in the price of that item. Let's look at a real-life example. Let's say you have a current balance of $3,500 and your minimum payment is 3% of the balance. The minimum payment will depend on the agreement the credit card holder and the company entered into. Using our example, it means that if you have a balance of $3,500, 3% of that balance means your minimum payment will be $105. If you only make the minimum payment, it will take you 18.5 years to pay off that balance. You also will have paid more in interest than the actual cost of the original item. That means the item cost you over double of what the purchase price was. As you can see by the example in the slide, just by adding another $10, you will reduce not only the length of time it takes you to pay off your balance, but also the amount of interest you will pay. In this example, you would be saving a total of $1,303.29 and over 8 years of payments. You can call this the power of 10. Just by adding $10, it can make a big difference in the amount of interest paid. What is important to note is that this example assumes that you stopped using the credit card after the $3,500 purchase and didn't buy anything else with it during the time it took you to pay off that balance. Seeing the real cost of credit can be a little intimidating, but remember, a credit card can be a great tool provided it is used correctly. Let's look at the following strategies to avoid financial complications. Never let your credit card reach its spending limit. Always keep part of your credit available for emergencies and other unplanned expenses, because maxing out your credit cards can be seen by lenders as a negative on your credit report. Also, know what your purchase will really cost. Remember to take into account interest charges and fees when making a purchase. Know the difference between wants and needs. Before making a purchase, ask yourself, do I really need this? You can lower your monthly expenses by avoiding purchases you can do without. We also have a budgeting workshop and resources that can be found on the Access website, which will help you to better understand where your money is going and changes you can make if you are overspending. Always make more than the minimum payment. Low minimum payments are designed for convenience, but not for quick payment of your balance, as we saw in the example earlier. Use credit wisely. Never miss or skip a payment. Skipping 1 or 2 monthly payments and then paying off the balance in full on the 3rd month will have a negative impact on your credit rating. Now that we know the best ways to utilize a credit card, let's talk about finding the right card for you. People may have very different needs when it comes to credit cards, and at different times in your life, you may need different limits. For instance, if you're traveling to a foreign country, you may want a limit high enough to cover an emergency. Credit card conditions can sometimes be hard to understand, so it's important to read the fine print and ask questions to understand the credit card policy. I'm sure some of us are guilty of skimming over a contract or agreement, like a Facebook user agreement or the privacy statement at the beginning of a DVD. It may not be the most exciting thing to read, but you need to carefully review terms and conditions of your credit card agreement. Not only could it save you money, but also you'll get the most out of your credit card. Here are some important things to know about your credit card. There are 3 things to consider when deciding on your credit limit. First, you don't want to have a credit limit that is too high if you're concerned about controlling your spending, but you also don't want a credit limit that is too low, as regularly charging more than 50% of your credit limit will reflect poorly on your credit report. And often first-time applicants don't get to choose their credit limit, but after a year of use, you can often call in and make a request for an increase if necessary. Credit cards have different features and benefits, such as travel points, merchandise rewards, or cash back. Consider asking yourself, are these the features I need? It's important to look at the fine details of the rewards program, since there is generally an associated cost. Some of the questions to consider before signing up for a rewards card with an annual fee include, will you benefit from a reward program that offers travel benefits? How much do you have to spend to earn enough reward points to make use of them? In some cases, you would have to spend tens of thousands of dollars to earn 1 flight, and you pay $120 per year to collect those points. Might you be better off with reward points or cashback? The interest rate is charged on purchases when you don't pay the balance of your credit card before the end of the grace period, and the interest rate can vary from card to card. Many department stores offer easy-to-get credit cards to encourage you to shop at their store. Some will also give you a discount of 10 to 20% on your first or subsequent purchases when using the credit card. Before you sign a contract for a store credit card, find out what the interest rates are. They are normally higher than financial institutions' credit cards. In the cost of credit example we used above, that credit card was charged 19.5%. However, they can be as high as 24%, which adds a great deal to the price of your purchases if you don't pay off the balance each month. Always make sure to understand how interest is calculated before signing up for the credit card. There's a wide range of credit card options with annual fees ranging from $0 up to $300. Many basic credit cards come with a no fee or a low fee, less than $50 option. On the other hand, gold or premium credit cards have more benefits and features, but charge an annual fee of $100 or more. Other fees may include transactions like cash advances, which allow cardholders to withdraw cash from their credit card, usually through an ATM. Cash advances usually have a fee such as $3 to $5 and then an interest rate of 20 to 25%, which starts right away. There is no interest-free period with a cash advance. The grace period is the time between the statement date and the payment due date and is determined by the credit card issuer, but it usually lasts between 15 and 26 days and is part of the interest-free period. Those who pay their credit card balance every month have the advantage of the grace period, whereas a cardholder with an unpaid balance will forego the interest-free grace period, meaning you're paying interest on every purchase as soon as you tap your card at the register. The same goes for cash advances. The minimum monthly payment is a percentage of the amount you spent. For instance, many cards have a minimum 2.5% payment, which means if you spent $500 last month, you must pay a minimum of $12.50. As we showed in our example, just paying the minimum amount will significantly increase the amount of time and the cost of the item you've bought. You also need to know what happens if you make your payments late. Purchases in foreign currency will be charged a foreign exchange rate, which fluctuates with the market daily, and also often an additional fee, usually 1 or 2% of the total purchase price, on top of the exchange. Some cards will offer a no foreign currency fee option. In this case, cardholders are only charged the exchange rate and not the additional 1 or 2%. Make sure to ask your financial institution or credit card company if they have credit cards designed for regular out-of-the-country visits, if that could benefit your situation. If you make an exchange or return on a foreign currency purchase, the refund is subject to daily foreign exchange rate, which may or may not be equal to what it was when you made the purchase. It is possible to lose money or make a gain in this transaction. So that's a list of the terms and conditions that you are going to want to familiarize yourself with when selecting a credit card. So which credit card is best? It's the one that meets your particular needs. For instance, if you use your credit card infrequently and for small purchases, you may want a card that has a low annual fee. On the other hand, if you travel regularly, you may be enticed by a credit card with travel insurance or purchase protection. The point is that not all credit cards have the same benefits and features, and you should pick your credit card based on your particular needs. So if you are turned down for a credit card, there are still some things you can do. A creditor may make a decision to turn you down for credit based on a variety of reasons. If at least part of that decision relied on a credit bureau report, then the creditor must tell you this and state the name and address of the credit bureau used in the decision-making process. You can then write to that credit bureau stating that you're denied credit, insurance, employment, or whatever is appropriate, and that you want a copy of the report. If you request the report within 60 days of being turned down, where the decision was based on that report, then by law, the bureau must provide it free of charge. We sometimes get questions about prepaid credit cards, so we will just briefly touch on them today. Prepaid Visa and MasterCards are an alternative to carrying cash. You put any amount of money on your card that you like, but you have to put money on your card before you can use the card. Use it like a credit card, but again, only spend the money you've already loaded on it. Because prepaid cards are not borrowed funds, this activity does not appear on your credit report. Some advantages of prepaid cards include they're convenient, they allow you to buy online, they prevent you from going into debt, and are available even if you have no credit history or bad credit. Some disadvantages are that you must have the funds available upfront to be able to use the card. They do not help you build your credit rating, and they can have high fees. Fees may include the following: activation fees, transaction fees for things such as to withdraw money from an ATM or checking the card balance, replacing the card, or loading more money. They also sometimes have monthly maintenance fees, which means they may charge you a fee or interest for every month the card is not used. Here are some things to ask before purchasing a prepaid credit card. What regulations apply? Is there an activation fee? What other fees apply? Is there an expiry date? What if I lose the card or it is stolen? How can I get my balance? Is there a fee for that? Can I cancel the card? Where can I use it? Would another form of payment be better? And are the terms acceptable to me? Finally, here are a few things to keep in mind in regards to credit cards and prepaid cards. Be sure to report a lost or stolen credit card as soon as you notice it's missing. Never tell your PIN to anyone, even family. If you share your PIN with someone and the card gets stolen and used by someone else, you may not be reimbursed for the loss if you've shared your PIN. It is also important to go through your statement each month to make sure all purchases are your own. Lastly, never leave your card in a place it can be easily found, like in your car. I just want to share a few resources with you before we wrap up. On the Access Credit Union website, under the Tools tab, there are several calculators, including budget resources, which you may find helpful. You can also find you can also visit the Access YouTube channel for more workshops. The Financial Consumer Agency of Canada is a government agency that serves to protect and inform consumers of financial products and services, and they have lots of great resources and information. Credit cards can be useful, but they can also cause great financial troubles if they are not paid off in a timely manner. Hopefully this workshop has helped you see how expensive it is to use a credit card that you don't pay off each month. You don't have to cut up your credit card if you've been paying too much interest, but you should consider talking to a trusted financial representative from your financial institution or a credit counselor if you find yourself in financial difficulty. The link to the Credit Counseling Society of Manitoba has been provided for more information. Thank you so much for taking the time to attend our credit card workshop today. We hope you enjoyed it. I encourage you to reach out to your financial institution whenever you have questions. We are all here to help. Have a great day.